Hello and welcome to the Nordic Finance YouTube channel. Today we're going over the July and August failure to delivers for AMC and subsequently GME. The two stocks are linked, the same companies are shorting them, so we're going to go over the failures to deliver, what that means, what a failure to deliver is, and what the current outlook is for AMC and its share price. So a failure to deliver at its most basic form is simply when one party in a contract, whether that be an option or shareholding contract, does not deliver on their end of the bargain. In this scenario, it is when short sellers are not buying back the shares that they had previously shorted and borrowed against. So when we have a large amount of outstanding synthetic shares in the market from these failure to delivers, the share price of AMC on the open market is somewhat manipulated when it comes to the actual supply and demand models calculating the share price. So we're on the SEC website. We're going to go into the actual SEC documents of the failure to delivers. But really quickly we're going to go into the share price chart. So here we have this kind of gamma squeeze that started this whole AMC rally back in June. Note how sharply it spiked. We actually got, this chart says 62, it was actually up in the mid 70s for a second there, but it went up quite a bit, and we've had just continued berating from short sellers trying to suppress this price action. And we're going to go into the nitty gritty of what those actual raw numbers look like right now. So here we have right here, this is the bottom of the June failure to deliver trailer record, and we have a total of 2.4 billion. See, we have here 1,000, 100,000, 100 million, billion. We have 2.4 billion shares. Now if we go over here to the total amount of actual shares, we should only have about 1 billion total shares between shares outstanding and the float. Now when we go into the price action that happened during all this settling of the shares, we had a crazy, it's not going to show in there, but it was like a 200 to 300% rally. Now when we go over to the current failure to delivers, we're at 1.6 billion for July, and in August they're continuing to suppress the share price through short selling. So what does this mean for the AMC share price? It means that we have massive failure to delivers, and the way that they're continuing to keep the share price down as they're buying back the shares is just continuing to do the same process of failing to deliver on the contracts and then dumping back shares on the open market from the dark pools and kind of rinsing and repeating so they can buy back these essentially illegal positions for far cheaper than they should be. Now, what does that mean for the open market share price? It means the open market share price is way lower than it should be, and reflected in the current amount of shares, this is saying that it should be 300 to 400% larger based on the amount, or 300 to 400% higher per share price based on the current amount of synthetic outstanding shares that are being used to re-short already synthetic shares. I mean, this is getting to the point where there's layers to the violations of the codes and conduct of the SEC, and it's really interesting that the SEC is willing to publish the documents that are saying that the failure to delivers are incredibly outstanding, and we're going to have the next update in a couple days here on the 15th of the month. It's pretty just incredible that the amount of information out there about what the hedge funds are doing when it comes to either negligent or downright illegal activity in the market. It just makes me kind of wonder if the AMC ape community is essentially being used as bait to catch the blatantly illegal actions of the hedge funds, or if they're simply waiting and building a case based on all the data coming in. This is a absolutely massive situation involving billions, if not trillions of dollars. And when it comes to the amount of money involved in the companies involved directly with AMC and GameStop being shorted, there's a lot of capital to be gained or lost one way or another. So there's a lot at stake, and the investigations subsequently are going to be very thorough on the SEC's part. So whatever is happening on their end, they are aware of the situations unfolding. They are publishing data that is in correlation with the thesis of the ape community. And when it comes out that the illegal trading kind of rinse and repeat cycle of dumping the synthetic shares to rebuy at lower prices for your shorts that were over leveraged to begin with, when all that information starts to come out like it has been, and more people begin to join the ape movement, it's going to be very interesting to see how that plays out. Of course, in the last month, we've had kind of a side-moving slow market, down 30% for AMC, and it's kind of been the first test of everyone that's been claiming diamond hands, whether that be on Reddit or Twitter. This is kind of the first test of metal when it comes to a lot of the AMC community. So it'll be interesting to see how this plays out in the long run. However, in the short term, we have the 15th of this month will be when the next SEC documents are published. And based on that information that comes out there, we'll be able to continue to build our thesis statement on when we can expect this short squeeze to happen. It's not really a matter of if it'll happen. At this point, it's a matter of when it will happen. There's kind of a point of no return. The only way the hedge funds can get out of this cycle is to continue to short, and more apes are joining the movement. So it's just really kind of siege warfare at this point when it comes to the AMC share price. And it's a war of attrition. This is not a short get rich quick scheme. And in my subsequent video, The Patient Ape Gets the Banana, I think it is summed up very well that you have to be patient, you have to be willing to do the research, and you have to be willing to just sit on your hands and wait for the situation to play out, because in reality, a lot of apes are sitting on very minor paper losses when it comes to the actual real world dollars that the hedge funds are having to pay to keep their positions leveraged the way they are. So when it comes to that war of attrition, it is definitely a lot cheaper for the apes to keep their positions, and that's why I think a lot of people are rooting for the apes when it comes to the way that this is going to play out. So if this video was informative, please make sure that you can share it with as many apes as possible so we can get the information out there that there are a crazy amount of failure to deliver synthetic shares in the market. We need to get this information out there, so share this video with your fellow apes, and I'll see you guys in the next AMC update video.